in past, we've had people ask, should I just buy the ETF because I could do it in my brokerage account? Prior to 2020, the answer would have been, well, if you want ease and liquidity, the ETF's probably the better option. What's changed since then, and this is something we'll demonstrate in a chart later in the presentation, the ETFs in 2020 changed their prospectus. They're no longer backed by purchases of physical metal. And the reason that was changed in 2020 was due to the supply and demand crunch, which is something we're still experiencing. And what these funds did further when they stopped backing them with physical metal was they realized they could actually sell metal that they had in their holdings to reduce their overhead cost. Because you think if they back purchases in the fund with purchases of physical metal, they then have to cover the storage cost. So without having to do that anymore, and this information came from a keen analyst, I'll point out to anyone, if you want information on silver specifically, he has great information. His name's Peter Krauth. Almost 70% of ETF holdings in gold and silver were sold off between 2020 and now. And so the separation becomes the ETFs now react more to volume when people are purchasing and selling units in the ETF, and has decoupled from the physical metal market because it's not backed by anything, really. This is a keen example here on how gold holds value and rises in value with the time, with the cost of living over time. And I want to expand on this to show you how profound the difference is just in the last 5 years from 2020 until now. What you'll notice is a Corvette in 1971 was just under $5,500. And at the time, you could have taken the same amount of money and bought 135 ounces of gold or roughly 3,600 ounces of silver. In 2020, the same car, instead of being $5,500, was roughly $68,000. But instead of taking 135 ounces of gold, it took 38. And instead of taking 3,600 ounces of silver, it took 3,300. The significant thing here, as you expand on this, and this is something I want to do with a calculator right now with anyone that's listening. If you look at just how that's changed in 5 years, the price of a Corvette, the base price right now, has gone up from roughly $68,000 to just under $73,000. But instead of it taking 38 ounces of gold, it's actually gone down to the point where it only takes 17 and a half ounces of gold, less than half the amount of gold in 5 years. And instead of it taking 3,300 ounces of silver, it would actually only take you, if we divide 73,000 by the current price of silver, it would only take you 1,350 ounces of silver. And so what we're saying is you can see how gold and silver beat inflation over that roughly 50-year period from 71 to 20. But if you look at the last 5 years, you can see it's almost like someone's put kerosene on the fire, and gold and silver have done double what they did over the past 40 years in terms of competing with inflation over this short period of time.